Good evening from London. The FTSE All-Shares started the day in positive territory, with oil companies giving the index some solid support. Despite a slip in Brent crude prices, BP and Royal Dutch Shell stock were trading above 1.8%. In other news, the UK's inflation rate rose to 0.7% in the month of March from 0.4% in February, marginally less than expected. Fuel costs and clothing prices pushed the figure higher. The CPI is still way below the Bank of England target of 2%. All 6 English clubs have pulled out of the European Super League after plans for the JP Morgan-backed venture were met with a fierce backlash. Manchester City were the first Premier League side to officially withdraw from the competition. In a statement last night, ESL bosses stood by its plans and said it would reconsider the most appropriate steps to reshape the project. Initially spearheaded by Barcelona and Real Madrid, the proposed new venture was supposed to generate £4.6 billion for the first 15 members. All of the clubs involved have lost millions in revenue during the COVID-19 lockdowns. Critics argued the move was driven purely by money, would destroy domestic leagues, and is against the integrity of the sport. Heineken shares rose nearly 4% in early Amsterdam trading today after the Dutch brewer posted a better-than-expected first-quarter performance. Given the impact of the tough lockdown of pubs and restaurants across Europe, analysts had expected overall beer volumes to decline by 5.1%, but instead the results were flat. The world's second-largest brewer reported a strong performance in Asia, Africa and the Middle East. Sales are up 5.4% in Asia and by 9.9% in Africa. In Europe, it was another story. Beer sales plunged 9.7% across the continent, driven by a decline of around 2/3 in pub sales, given the lockdown restrictions. Shares of Netflix plunged by up to 13% on Wall Street overnight after bosses posted disappointing first-quarter subscription numbers. The streaming giant added just 4 million paying users at the start of this year, compared to 15.8 million in the same period a year ago. Investors had projected 6.29 million users. Netflix has been warning investors for months that growth would slow as customers emerge from COVID hibernation. The company also cited production delays due to the lockdowns, which resulted in a weaker content offering. The results mark the slowest first quarter for the group since 2013. Those are your main stories from London at close of business.